GTII, very impressive moves, very impressive. I'm very excited over that. I want to talk to you guys about yesterday's video and more importantly, what could be happening for the following sessions. Let's go ahead and dive in. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII, technicals, raw price action, and statistical thread of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right in. Okay, so this is what I wanted to talk to you guys about, okay? Take a listen. And now we're getting very close to that next psychological target, which would be the 3.618 golden mean at about 286. This is essentially the target that I was talking about in the previous days, reaching 286 to about 294. And it looks like we are absolutely on path to make that realize. Okay, so this is a very important target to get over as well. Very, very strong resistances here. Okay, so very strong resistances is absolutely right. Okay, now the reason why I'm mentioning this right now is because as you can see on the current price action, we absolutely went to that target. And I wanted to talk to you about this target is because I didn't guess the target. It wasn't only because we were finding it as a golden mean, the 3.618. It wasn't only that. It's the correlation and I'm talking about the enormous amount of rhyming within this target here. Okay, so the target is not only the 3.618 mean, but it's also the target and the absolute playbook take profit target per the broadening descending wedge. Usually, how you trade this formation is that you wait for the fourth or fifth breakout attempt out of the out of the tests of the resistance. So we broke out on test number 5, and in this fifth test, we actually went right to that target where the genesis of the formation starts. Okay, so that is how I was able to tell you that was the target that we were looking for, and we're going to find a lot of resistance there. Okay, so the pullback today isn't a short attack. It isn't anything like that. Of course, the short positions are going to open here because that's the take profit for the longs. So the longs came over here. We shook hands with the shorts. The shorts entered their position. Now at this point, it's going to be up to the longs whether we decide it's going to be a bear trap or whatever, right? Everything is still indicating an upside though. We're going to face this pullback. This is a natural pullback. Another thing that we have to realize is that we're on the 3-day chart. We made this breakout. We realized the absolute play out of this broadening descending wedge. But if you haven't noticed just yet, we haven't actually come back to validate this newly converted resistance. I'm talking about this top trend line into a support. Okay, so the possibilities are still there. It doesn't always happen, but they're still there. Okay, now another reason why I'm not just guessing this target, okay? This is why I want to make this episode, if you want to call it that, a very special one because I've never really shared anything like this before with anyone, okay? So I'm going to go ahead and minimize my TradingView software so that you can see what I'm going to be doing. Actually, this is going to be a collection, a poster collection, and the collection is going to be called correlation. It's going to have my signature at the bottom right, just like an artist or something, right? Because this is truly art, and the ARCa Bulls logo on the left. So take a look. Every single ticker that I've actually been a part of, and the inverse tickers as well. So you're looking at that real recent ticker that Moon put up, AI, broadening descending wedge, taking that profit right to that target, retracement. We have CEOS, huge take profit at that genesis of the formation, big retracement, right? We have now GTII, we have a huge retracement right after that take profit. This is IFBD, okay? Here was the take profit, we retraced, and then we continued, okay? So now this is MMAT. We actually surpassed the target. We came all the way back down to test that newly converted resistance into support, then continued onwards and upwards, right? And this is IMBI. Okay, huge touch right here, big retracement after that. Okay, now the inverse ones are exactly the same, except they're just inverted. Okay, upside and then the target at the genesis of the formation. This is AMC. This is BBBY. okay? And this is Weber, so WEBR. Okay, so all of this is just correlation. This is particular to the bear market cycles, to a recessionary period, to a bear market period, whatever you want to call it. This is anxiety. Okay, so now let's go ahead and continue with our analysis. I just wanted to show you guys just how familiar I am with the formation and how familiar I am with the rules of trading it too. Okay, so if you're very curious, by holding Crypstex indicators, you gain visibility to the ARC Edge Trades channel in Discord, where you actually get to see my exact plays. For example, this is IFBD that I posted up about a week or two ago. So you can see every single target was met, and here's my entry, my stop loss. Take profits up to 4. Okay, so I mean, I just want to be abundantly clear that I'm being transparent, right? So I just want to show you that it's not just the one ticker that I got lucky with. It's not that. Okay, it's just probabilities, psychology, and that's all. Okay, you guys, the math said it. It wasn't me. I didn't call it. I didn't do anything like that. I'm just familiar with the rules with it. Okay, so don't go around saying ARCa called it. Okay, it's not anything about calling. I don't like that stuff. Okay, you guys, it's not about calling it. It's just about playing the rules to the game. It's a good perspective. All right, so now let's go ahead and move on to the following chart. Actually, so this is So I mean, speak of the devil, right? So these are the ARC-Series Crypstex indicators. Okay, so this is enhanced MACD, and I wanted to point this out still because we are absolutely still at an expansion phase of volatility represented by the red cloud, right? And momentum represented by the MACD average is still suggesting an upside continuation, and we still have that bull signal printed from January 25th. Okay, so everything is still looking pretty good with this with the indicator. Please remember that the last time that we contracted to tight levels, just like we did right down here, we actually expanded into a massive move that led to about $9. Okay, so this is still looking good. Let's move on to the next chart. So this is Crypstex ARC-Series DBSI. Okay, so DBSI, and I'm sure all of you remember, it's a statistical indicator. It takes a metric of every single candle throughout the asset's particular time frame. So in this case, the 8-hour. Upon getting that measurement, we actually get it displayed as a strength value and percentage. Okay, right up here. Bears losing at 27%. Bulls are at a 73%. Okay, very good stuff here. Okay, now another thing that DBSI does is that it still recognizes when we're above the 13-day exponential moving average. Okay, so you can see we've already used that 13-day exponential one time. It looks like we may even be able to use it again. It's no problem at all. Okay, but I want you to notice that upon touching that 298 top, 297, 298, right? So we actually faced a huge amount of buy volume, right? No, I'm sorry, bear volume. So bearish, like sell pressure. And this candle here, which was the rest of today's iteration, you can see that the sell pressure is starting to minimize in volume. Okay, so this is good stuff. And now we can see that we're still in the strength. We're still leading. All right, so the next chart actually represents the statistical side of the analysis, which is volatility versus momentum. Okay, so volatility represented by BBWP, momentum represented by stochastic momentum, which is a proprietary indicator to TradingView software, which, by the way, the affiliate link is in the description below. If you would like to sign up, it would greatly help my trading future out. Okay, you guys. So the important part about momentum, and I actually expressed how exciting this was yesterday, is the fact that we finally broke this whole year of a trendline regression or a trendline rejection, right? So this is great. You know, it means that we're now breaking market structure. Okay, so the upside is still absolutely relevant, right? And also, please know that this is the 3-day time frame. Okay, so it's going to take a lot for it to manipulate this to the downside. A very important thing too is that we're approaching the critical volatility zone within volatility. Okay, so that would be within the 90 percentile. Okay, anything at 90% or within the 90 percentile would be great. And in this case, we are following a regression pretty nicely. Okay, so if there is the potential of us starting a contraction phase, remember this is direction neutral, but since we're still in expansion and still favoring the upside on momentum, then this is pretty likely to reach the critical volatility zone again. Okay, so now let's move on to the last part of the analysis, and this is actually going to be the RSI. Okay, so just like always, we're going to start off with that 30-minute immediate short-term time frame. You can see right away that in the 30-minute, the downside is actually losing some pressure right here. Okay, so this is it's a good sign for the immediate short term. Same thing on the buy hourly. Actually, we're minimizing that sell pressure, but it's also in respects to the fact that we're in the gravitational zone of the bull weakness percentile. So this can literally bring us right back up. All right. So now the 8-hour time frame is suggesting a continuation to the downside, and it is a pretty significant pivot. Okay, so that gives me that we're gathering all the puzzle pieces first, right? So then we can see where we're going next. All right, so we have to just understand this first to see where we can go. Okay, so let's keep in consideration that the 8-hour chart is suggesting a continuation to the downside and making a very bearish cross below this 14-day simple. Okay, the daily time frame is suggesting that downside as well. But I would like to point out that the downside is not quite as aggressive as this over here on October 2022, which I think was the $9 range. Is not as aggressive as that, but it's still pivoted as a pretty good nosedive. The thing here to remember is that we have the 14-day simple moving average still making its way up, which means that we can eventually find that support from it and then move to the upside. Very likely we can actually find a support within the gravitational zone of the bull weakness percentile. Okay, so it would likely end up right about here. The RSI signal purple line would actually come down, meet the 14-day simple moving average pink line and the gravitational zone, and have us continue on to the upside. The buy daily is, you guys already know how I feel about these pivots. Okay, I don't really like these pivots. Just like this tiny one, they're not good to consider into the play. So this is, if we do continue to the downside on the buy daily, we still have the 14-day simple below us, which is suggesting a temporary downside. So now as we jump on to the 3-day time frame, you can actually see that we've only barely kinked the bull strength. And the great thing here is that we are about just under a half a percent into reaching this gravitational zone here, which would essentially take us into the following zone for the bull strength percentile. Okay, and 5-day iteration, of course, it's still pivoted to the upside and in the grips of the bull weakness percentile. So this can still continue on the upside for several days. Okay, same thing with the weekly, and bi-weekly should also be flashed to the upside. There we go. Oh, nice. Actually, the bi-weekly just made that cross above the 14-day simple. This is good news. So yeah, we're still good. We're gonna definitely face a temporary downside. If we were to put some targets, right? So I guess we can do that. Absolutely, we can do that, right? So first of all, we can actually just scooch ourselves into the daily time frame, and we can take an inverse fib from the range low to the range high. I'm talking about wick low to the wick high of the daily range. Okay, so in this case, let's see where the retracement already happened, where we already took it there, right? So it's very curious because these are all golden means that I've had from before. I'm talking about from this fib retracement right here, which was actually, let's see, between the knot 382 and the knot 618. So 165 is the one spot 618 now in an inverse manner, right? So this is a high potential, but I'm just saying that it would take a lot of volume for us to get down there. It's not. I'm not favoring all the way down here, because if we did face that $1.65 zone, then we would essentially touch right back down to the newly converted resistance of the wedge to validate that support and then continue on to the upside. Okay, so I guess I'm just gonna put it out there, okay, because it is a possibility, but I don't see it as likely. But I have to put it there because when things aren't quite as likely, they tend to happen, right? And yes, it is. It is looking like it's like a terrible loss. But the thing is that when you're looking at it, based on this type of scale, then the touchback down to here looks only necessary before continuing, and it'll follow that natural ebb and flow. Right? You can actually already see that zigzag happening. Right, so it has to happen. You know what I mean, you guys? But yeah, and then after this, we would then come back and start knocking at the door of the following targets. Right, where we were, and also, I mean, starting with the current lows of 237, followed by 286 and 294, or wherever we touch 298 or 297. Let me see that wick high actually. 298. Okay, so just about 4 cents off. Don't sue me. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I am not actually able to suggest for you to buy or sell any assets whatsoever. Okay, you guys, do your own due diligence and everything will be just fine. All right, you guys, so go ahead and refer to the link below if you want to reach out to me on Twitter, on Discord. You'll find my email here in the About section of the YouTube profile. Okay, you guys, but with that said, I wish you well, a very good night and a great weekend, and I will catch you at the bell on Monday. Adios.